Hi there, my name is Mark Bracken Wilson, and I want to introduce you to a system that I've created to assist with the learning of the basics of accounting. I've called it Chromaccounting. Chrome means adding colour to something, so this system adds colour to the world of accounting. The system is designed for anyone wanting to learn accounting, from first-year business students to business owners, for university students, and for business and accounting teachers to help their own students. In this video, I'll explain the colours and how these colours can help you to create financial statements. I'll explain all this by telling a quick story. So we have a person here at home wondering what to do with their life. And they have a light bulb moment. They have an idea for a new business. They're going to sell boxes. They have some personal savings, so they create a business and put their own savings into the business. The owner is shown here wearing a yellow shirt. So every time we think of the owner, we think of yellow, which represents the light bulb, the idea that created the business. Now the owner recognizes that they don't have enough money to start the business, so they approach the bank for a loan. The bank assesses them and decides that they can lend 2 bags of money to the business. So the 2 bags of money get transferred into the business as well. The bank is shown here in red. This is because a business must be very careful when borrowing money from the bank, as if they borrow too much money, the business will have a lot of debt to pay off and be in danger of failing. Red is the colour of danger. The loans are great, but the business needs to be aware of the dangers of borrowing too much money. So now the business has 3 bags of money. 1 bag is borrowed from the owner in yellow, and 2 bags are borrowed from the bank in red. Now the business doesn't really know or care which bag of money came from the bank and which came from the owner. So if we mix the colours yellow and red together, we get orange. So now we'll mix the yellow bag and the red bags together to create 3 orange money bags. On the left-hand side, we now have 3 orange money bags, and this is represented by the 2 red bags plus the 1 yellow bag on the right-hand side. Orange equals red plus yellow. Now the business decides to use one of the orange money bags and buys a warehouse to run the business from, and another bag of money to buy a van to make deliveries from. So in orange we have everything that the business owns. 1 bag of money, 1 van, and 1 warehouse. And on the right-hand side we have everything that the business owes. 2 bags of money to the bank and 1 bag of money to the owner. We've created a balance sheet. The money that the business owes to the owner is called owner's equity, which is in yellow, the light bulb. The money the business owes to the bank is called a liability. It's red for the danger of overborrowing. The combination of money borrowed from the owner in yellow and the bank in red will always equal the amount that the business owns in orange. And these are called assets. Now we have a business. We can start selling our boxes. We have a customer here in green who buys a box and gives us cash for the sale. The money bag is green because green is the colour we would associate with cash, which we've received or are about to receive. More customers come and pay cash for the boxes, giving us more bags of green money every time we sell a box. And now we need to pay some invoices. Here is a person that we have to pay money to for various regular services and products that we've purchased in order to make those sales. The person here is blue, and blue represents the feeling of paying money out of our bank account, which we don't really like doing, but we do have to. This may make us feel a little bit sad or a bit blue, as the saying goes. We pay for business purchases like phones, power, or purchasing the boxes which we're on selling. Now we've collected 5 bags of money from selling the boxes, and we've paid 3 bags of money to our suppliers. We have 2 bags of money left. The remaining 2 bags here are yellow. That's because if you take green and remove blue from it, you're left with yellow. We've now created a profit and loss statement, and this tells us how profitable the business is. The business has 5 bags of money from sales of boxes in green. This is called revenue. The business has spent 3 bags of money in blue to their suppliers. These are called expenses. The business has 2 bags of money left. They've made a profit of 2 bags of money. The profit is yellow because green minus blue equals yellow. Now, who does this profit belong to? Well, if it's yellow, then it must belong to our owner. And we show that profit in the yellow owner's equity part of our balance sheet. And here it is, 2 bags of money. The 2 bags of money are also in our business bank account because we received 5 bags of money into our account from sales. We paid out 3 bags of money for expenses. So you can see that our balance sheet now has 5 items on each side. 5 assets in orange equals 2 bags of red money, the liabilities, plus 3 bags of yellow money being the owner's equity. Perfect. So to recap, we have the balance sheet, which shows how strong the business is, with the owner's equity in yellow, the liabilities in red, and the assets being a combination of liabilities and owner's equity in orange. And we have the profit and loss statement with our revenue in green, less our expenses in blue, leaving us our profit in yellow. And the profit belongs to the owner. So that's Chromaccounting. Hey, thanks for watching. Please leave a comment. And my thanks to Oliver for doing all of the artwork. Bye for now.